Let's take a look at how active, or should we say inactive, GPs were in 2023. Overall, contribution activity appeared healthy on an absolute basis, but considering the growth in private markets over recent years, 2023 feels relatively muted. As a percentage of unfunded capital, 2023 came in at levels not seen since the depths of the global financial crisis. This relative lack of activity held true across most strategies. And while areas like buyout and venture were down given the macro backdrop, it wouldn't have been surprising to see credit with higher activity given the rise in interest rates. Yet, that was not the case, and likely due to lower LBO volume, where private credit plays an important role. On the real asset side, the story wasn't all that different, with 2023 pacing approaching GFC levels. With this lack of activity, it must mean that the capital overhang, or dry powder, is growing and will impact returns going forward. Not true. Historically, there has been no correlation between the amount of overhang and returns. Dry powder levels just don't mean all that much in this asset class. What's more important is looking at how long it takes to deploy that dry powder. In fact, it's one of the most important data points as it can signal interesting times to start buying or selling assets. In 2020, we saw market peak signals for venture and growth, and buyouts showed the same signal in 2007, right before the GFC. Today, the signals for equity and credit are suggesting a better buying environment, similar to that seen in 2003 and 2009. On the real asset side, the data is a bit more volatile, thus making it harder to read signals, but certainly trending in the right direction.